Yeah. So Charles, is it correct to assume that if you are undercutting in the market, long-term consequences is, as Kelvin is putting across, the consequences are dire? Should we be worried about one underwriter or one insurance company that is undercutting? Because in the long term, they are going to suffer the consequences. Should we be worried, all of us as market players?
Absolutely, Simba. We have to be worried about the practice of individual underwriter to undercut, because it will definitely affect the whole market in a long run. Because if I have a behavior of undercutting, perhaps I will take some of the clients from the other companies. Perhaps if I take, the other company will basically push back and basically try to get, because as I said, you basically, as a company, you have a target, you have objective, both at the top line and at the bottom line. So if you find yourself losing on the top line, even though you're doing good on the bottom line, basically you face backlash from the board and the owner of the company, if just like that. So I think you will start doing the undercutting. So I think we should be worried about individual underwriter who practice the undercutting, and of course we have to condemn that sort of habit, because it makes the market unsustainable in the long run.
Yeah. Sharon, should you be worried about your competitors if they're undercutting? Eventually they will think, why should we be worried?
Yes, like we should be worried if they are undercutting, because in the short term it is bad for us in the short and long term as well, because short term we are losing business. But in the long term as well, the client will already, I've already seen this, when the client got an insurance premium for like an undercut price, and then the next year, like if the current underwriter who had undercut the premium didn't like or is not maintaining that price, because it is not sustainable anymore, because they got too many claims and cannot maintain that price, then the next year they will increase the premium, and the client will come out in the market to look for this with other cedents, and we will not be able to match it. And then what will happen, because the client will already be used to that low premium, and they won't understand why we cannot help them at that premium. So it would be bad for everyone, I would say, the whole market.
Yeah. Iara, in business there's a saying that cheap is cheap. I mean, it has to play both ways. If the clients are chasing low premiums, there's a chance at some point that they will not be able to recover from the insurance. I mean, I don't know how can you put it across to make clients understand that going for the cheapest price is not always the best.
Okay, I believe that one of the best ways to learn about it is at claim stage, because you pay a low premium, and then when it comes to a claim, the same company will not be able to honor the claim. Yeah. So at that more particular moment, the end consumer should understand that maybe it's the reason that the company is accepting low premiums and now he's not able to honor the claims. But what happened is, most of the times when that happened, they end up with the feeling that all the insurance industry is just histories. Yeah. They don't understand that the main problem is the fact that we are paying low premiums. They are not able to cover up all expenses and honor our claims.
Yeah.
So it is a work that should be done between insurers, brokers, and end consumer, so that they end consumer has a full view of the impact of the low premium rates that they are paying at some point.
Yeah.
And the only way, unfortunately, the only way that they understand it, it's when it comes to claims.
Yeah, but we don't want it to get that. We don't want it to get that. We love our clients. They must
Yeah.
be when there's a loss. How
Yes.
can we avoid this practice of rate undercutting?
I would say education, financial education, insurance education. From the moment that they understand exactly what does insurance mean, the value chain of insurance, I believe that from that moment they will understand that there is a price to pay. We are not buying potatoes. It is we are buying cover. It is it is a financial institution. So I believe that education will be key.
Yeah.
If we go around and educate our clients in order to make them understand, I believe that it can work. Education can be a good one.
Yeah, Kelvin, you are smiling inside.
No, I'm inside and outside. I think the guys are hitting the nail.
Yeah. What must we?
I totally agree. I think clients need to be sensitized in terms of the effects. I know some clients are aware, because what we've seen is a client walks into insurer A, and then they get a rate. They go to insurer B and say, "Can you possibly match this rate I got from insurer A?" I think some clients are aware in terms of them saying, if anything were to happen, this insurer may not be able to then honor its obligation. But I think it all starts in sensitizing our clients, our markets, in terms of them saying, what effect does this have? Like you rightly mentioned, to say cheap is cheap. You know, if you're gonna get something for peanuts, you better be prepared to take the peanut shells as well.
And do you believe regulators have got a role to play in fixing this mess?
They do, but I think what we've seen is not necessarily them coming in to enforce. I think their position is more on a moral suasion basis, to say this is not good for you, it is not good for the industry, and it's not even best practice. So you are then encouraged to do the right thing, and not to necessarily say you are probably creating a statutory instrument on minimum rates. But also what I see, it's what is also interesting is the coming on board of I think is it Emeritus 17, whereby in terms of just a snippet, in terms of then saying, it then forces you to then say, in terms of how you recognize your profit, to say if you are going to look at your present value of cash flows against your liability for future liability for the remaining coverage, you then find that you may end up with an onerous contract. And once you have an onerous contract, what Emeritus 17 then says is to say you are supposed to recognize that in your P&L immediately. But if it's then profitable, it's got to be deferred throughout the duration of the policy period. I think that in its way will then maybe correct this anomaly in terms of pricing, because no shareholder would want to see their financials filled with very onerous contracts. Thanks.
Yeah. Charles, what can be done?
To me, basically quite different from Iara and Kelvin a bit, but we're on the same route.
Yeah.
I think to me the focus should be on the insurance company, should be on the underwriters, because they are the driver of this undercutting thing. Yeah, because if I give a client a lower price and then goes to another underwriter, get a more lower price than mine, then we are the one who are influencing this. So I think we should, you know, the sensitization and education should be on the underwriters, and of course, to the board of directors, they need to understand that if they're pushing their incentive, they're pushing their remuneration, it should not focus much on the top line. It should focus on the core business of the company, which is the underwriting profit. So whatever amount they're making, as long as they're making a profit, it should be okay to them. Because if you push the management, if you push the underwriter on the top line, basically the issue of undercutting will be there. But if you tell them that you focus on the bottom line, you focus on the underwriting profit, then they basically give a price which is commensurate to the risk which they're taking. And of course, if there is that common understanding between the players in the market, that means if I give a price of $2 for a cover, I'm expecting a $2 cover from other company, or a $2.50 to another company, which is not that much difference. But if I'm giving a $2 cover, and that one is the other underwriting is giving $1 cover for the same exposure, that is where the problem comes. But if we have a common understanding, we can actually push this to the client, because if I go to underwriter X, I get the same price. If I get to underwriter Y, I would say I get the same price. Yeah, I think in charity should be begin at home, they say.
Yeah. So Charles, if I manage to improve my underwriting models, I manage to cut my cost, I manage to differentiate my product, why should I still charge the same $2 that you are charging? Sharon, I mean, what else can we do about that undercutting? I'll just leave you hanging there, Charles. But maybe Sharon, you can come in. What should we do about this?
For me, as mentioned, it's important to educate everyone in the chain, so that they understand the like what we are trying to do, what we are selling, the product, and like why rate undercutting would be bad for both, like for everyone, like all parties involved. And yeah, this is important. And yeah, I think that's right.
Yeah, Charles, I believe you want to address my question.
Basically, what I want to say on your question is, yes, you can improve your system. You can minimize your management expenses, but the reduction of the price will be there, but won't be that effective. Huge reduction. It won't be 20. It won't be 50%. Perhaps it'll be 10% or 15%. That one, it's accommodatable, and it can be justified that I have improved my services. I have cut down my cost. That's why perhaps I'm charging this much rate. But you cannot tell me that I'm charged 50% less because I have improved my process, because I have reduced my management expenses. I don't know. You are the reinsurance broker. Are you ready if I reduce your commission by 50%? I think that argument should be there, but it is the reduction of the reduction of the rate should not be that much.
Yeah. So Charles, I do agree with you. And you see, I think we are operating in a rapidly changing environment, and one of the rapid changes that are coming through the market is obviously infiltration of disruptive products, disruptive innovations. And just to give you an idea, there is one article that I've accessed recently. If you check my LinkedIn post, you will see I've posted that article. And one of the leading business people in the world, Elon Musk, says he wants to innovate in the insurance industry because the chain is too long and the clients are paying for the long chain. There are too many intermediaries and agencies in between. And that is the basis of my question I'm asking. If someone comes and innovates enough, are we going to stand and challenge them and say, your discount is too big? Is there room for us to innovate? Is there room for us to do things differently? That's what I'm trying to challenge now.
Of course, if it's just viable, if it's just viable, of course, it cannot be treated as undercutting, because the evidence which perhaps the underwriter, there are so evidence which can be seen that the underwriters has taken some step to basically streamline the processes, reduce the management expenses and all that. So if it can be justifiable and of course can be seen, perhaps I can take it, because perhaps as an underwriter, I will need that sort of innovation as well, so that I push some of the expenditures and of course the markets grow. What my cry is, you charge a certain premium rate or a certain price, which at the end of the day, it becomes difficult for you to pay the claim when it comes. That is my challenge. That is perhaps the definition of the undercutting. So if you're charging a 50% premium less, and whenever the claim come, you honor them promptly, perhaps, then there is no problem, because and of course you put in some return on the money of the shareholder, then there is no problem on that.
Thank you, Charles. I think very well put there. I couldn't improve that explanation. I think it's something that everyone would quite understand. Any last closing remarks from the panelists?
Simba, if I may add to what Charles was saying, I think there's a lot of innovation happening, strategies that are coming up. Say in your marketing, for instance, you have concepts like predatory pricing or penetration pricing, which work well when you're looking at the manufacturing space or when you're selling goods and commodities. But those strategies do not conform in the insurance space, because what we have in insurance is an uncertainty. We do not have a fixed no, look, for this year, for this particular client, I'm going to be paying X amount in terms of claims, so therefore I can charge so much. But the whole concept is to then say you're building a reserve in terms of, say, from which you will then pay anticipated or future losses that are known in the future. So some strategies may work best in the manufacturing, but they do not work when it comes to the insurance space.
Yeah, so Kelvin, you are saying sometimes what we are calling innovation is actually a penetration strategy. The guys will realize when they're in the industry that they need to charge the correct price.
Yeah, possibly.
Iara, closing remarks.
Yes, as we all panelists say, actually, when we talk about undercutting rate, it's when we are talking about a reckless way of just reducing premiums. But from the moment that the portfolio is well managed and well analyzed, and the rate is detected according to the behavior of the portfolio, we can no longer call it undercutting, because we know that the underwriting understands exactly to what extent he is exposed. And then talking about innovation too, if we reduce the value chain or the steps that we have in terms of insurance, of course the rates will reduce. Some time ago I was reading somewhere that for some life companies, the gym card of the person is linked to the insurance. For the number of days that the person goes to the gym, reduce the premium at the end of the period. So there are things that being done to reduce and minimize the risk. So at that point, we do understand that, okay, rates may drop a bit. It is not undercutting. It is portfolio management.
Charles, Iara seems to agree with you on innovation. Your last comments?
I think I agree with Kelvin and Iara on what they said. Yeah, and of course we are in the information era, and of course the technology. Yeah, so we really need to use the information we have to develop strategies, to develop, to come up with innovative innovative tools which basically can make the insurance market profitable. Yeah, that's what I can say.
Thank you, Charles. Sharon, last word.
I agree with what everyone said, and regarding rate undercutting, underwriter reduces the rate, and he still find a way for it to be sustainable, and he's still able to manage and pay claims and still make profit. Then I think it's still okay. It is not called rate undercutting. It is only when they reduce the rate so much that it's not viable for them in the future to pay claims, then it is a problem. And I believe technology may help us in the future to help and decrease the price of premiums, like the other panelist mentioned.
Thank you, Sharon. If I may sum up, I think from the discussions we've had is that the primary thing is that the insurance premium collected must be commensurate with the risk or with the exposure that the client is bringing into the pool. And when you look at the pool, we are not looking strictly at one insurance company. We are looking at it from an industry point of view, industry level. And of course, the key thing is that we are supposed to collect adequate premiums to pay claims. And from what I gather is that the aspect about rate undercutting is not so much about charging less than your competitors or charging less than the other insurance company. It's so much about making sure that you are collecting adequate premiums to honor claims. So if at some point you are then not able to honor claims, it means one of the problems is you are not collecting enough premiums. So there's an element of undercutting there. Definitely a lot of ways to improve the situation, training, innovation, cost cutting, and so forth. I hope our viewers and followers have gained a lot from this discussion. If you wish to ask questions, our panelists are here. I believe they're experts in various ways. You can contact them directly on their platforms. The information will be shared here. And you can also discuss on this platform also for public discussion, if we may. Thank you so much to my dear panelists. Thank you so much for making time for this discussion and for your valuable and well-researched contributions to this discussion.
Thank you.
Thank you, Simba.
Thank you.
Thank you.